Welcome all of you. Today we are going to discuss about the basic accounting equation. So in this chapter, we are going to discuss in detail what are assets, owner's equity, and liabilities. So let us start from the definition of accounting equation. What is an accounting equation? Accounting equation is a mathematical operation which we use to calculate the assets, owner's equity, and liabilities. So let us talk about in detail about the elements which is included in this accounting equation. So let's take this example for a while. Now you can see a person called David. David is going to start a business by himself. So to start his business, he required resources such as furniture, air conditioners, etc. So these resources are controlled by this business, right? These resources are controlled by this business. And also, these resources are already purchased. That means it's a result of a past transaction. So you can build the definition of assets, which is called assets are the resources which controlled by the business as a result of past transaction which gives future economic benefit. That is called assets. So assets can be mainly divided into two groups, current assets and non-current assets. What are current assets? Current assets are the assets with useful life which has less than one financial year. Examples, cash in hand, debtors. Non-current assets are the assets with useful life which has more than one financial year. Examples, furniture, equipment, land and building, motor vehicles, etc. So now you can see another person called Smith, right? One day, this business is asking him for a loan $500 to purchase stocks, right? Now, Smith is going to give $500 to David's business to take his stocks. So, he is not giving money for free, right? So, business have to pay Smith on a future day. That means there is a present obligation between this David's business and Smith because David's business have to pay that amount to Smith on a future day. That means there is a present obligation. So this is liabilities. This business is liable to Smith because they took a loan, so they have to pay it on a future day. So this is called liabilities. Or in other words, liabilities are the present obligation of an entity which transfer economic resources. Now you can see cash. It's an economic resource. It is transferred, right? That transfer economic resources as a result of past transaction or an event. This is called liabilities, right? Now let us talk about the owner's equity. In simple manner, we can discuss like this. The difference between the assets and liabilities is equal to owner's equity, right? Or in other words, the owner's part of the business is considered as owner's equity. This is the simple definitions which can be used for assets, owner's equities, and liabilities. Right. So in this chapter, you got an idea about what are assets, owner's equity, and liabilities. In next chapter, I'm going to discuss an important part of accounting. So thank you for watching this video.